Hey, good morning. My name is Britton Johnson. Welcome to another of Walking and Talking with Britt again. I am blessed to be the founding partner of Voluntary Insurance Partners. And what we are a brokerage firm that focuses on small business health benefit solutions. We work with business owners who really care about their employees. They think of their folks as family. They want to do something for them when it comes to benefits, but understanding a budget comes into play. Hey, this is where my team is the best in the world. Give us a shout. My website is down below in the description, voluntarypartners.com. Check us out, reach out to us, and we are here to help you. All right, aside from that, today's industry lesson. So I really wanted to talk about kind of the evolution of policies and products and how they go with the market over time. And today in particular, I'm gonna talk about the evolution that we've seen from back in the day in the last 20 years, from cancer indemnity policies to lump sum critical illness with cancer benefits. Now, for many, many years, cancer indemnity policies are very popular, all right? And for good reason. They are there to put money directly in your pocket if you were diagnosed with cancer. And if you look at the studies, according to the American Cancer Society in the US, men have a little less than a 1 in 2 lifetime risk of developing cancer. For women, the risk is a little more than 1 in 3, and the financial implications are absolutely brutal. I know, unfortunately, I've dealt with it in my own family, and it's tough. It's definitely tough, and I can almost guarantee you that you know someone who's dealt with the financial implications of a cancer diagnosis, and we never want that to happen, but it's just the reality. That being said, let's explain some of the differences in market changes. See, the market has really shifted in this area, and everyone, for good reason, also has gone to lump sum critical illness packages with cancer benefits as well. Now, there's some pros and cons. Let's talk about all those pros and cons. Number one, the pros for a cancer policy. You typically have what's called composite rates. So composite rates means that everyone gets the exact same rate across the board. So whether you're 60 or whether you're 20, that rate is going to be the same, which is really nice to have composite rates. However, understand that those policies cover cancer only, okay? They're not covering heart attacks or strokes or coma or paralysis or end-stage renal failure or Alzheimer's or loss of sight, speech, hearing, and a multitude of other things that a critical illness plan can cover. Also, here's the big unknown that people don't really discuss, and it's important, and the actuaries have kind of figured this out. So on a standalone cancer policy, someone might buy what's called a building benefit rider with an initial diagnosis benefit. So every cancer policy typically has an initial diagnosis. So it might start you out at $3,000 if you were diagnosed with cancer, and then that building benefit rider increases that initial diagnosis every year that you have the policy up until you turn age 65 or what have you. So that initial diagnosis benefit can increase if you've had a good agent that's written it the right way. However, I want you to understand something. When someone is diagnosed with cancer, they have a policy like this, they're pretty happy to receive the first claim because they've gotten that initial diagnosis benefit, which is the majority of the policy. It's kind of a one and done on the initial diagnosis benefit. So if you had a separate form of cancer, that initial diagnosis benefit typically doesn't pay. But you do get subsequent benefits for, hospitalization, chemotherapy, treatments, and what have you. Here's the problem. Every time someone goes in for follow-ups, they go in for treatment again, they go in for a hospitalization, whatever it may be down the road, that person is essentially starting a new claim over and over again. And man, I've got to tell you, the mental, emotional struggles that people deal with when dealing with a diagnosis are pretty significant. And the last thing that we want to be doing is burdening them with more and more paperwork. I can tell you, and this is a sad story, many occasions, I have found monies for people in their cancer policies post-mortem and gotten those monies for their family because, quite frankly, the client doesn't want to deal with the paperwork and the hassle. And I hate to say it, it seems like a lot of these claims departments, especially at your big box carriers, your publicly traded carriers, it's almost like they want they want to make it a little more challenging and a little more difficult. And I hate that, because this is when people need money at their most dire moments in life, and it's our job to be there for people. So we and the market has really decided to go to lump sum critical illness and cancer. So this is a policy where you can choose a lump sum. In our agency, we offer $10, $20, or $30,000 per diagnosis. So if you've ever had a heart attack or stroke or cancer or any critical illness, like we've got 21 critical illnesses that are listed, you can get a lump sum tax-free of $30,000 right off the bat. Here's the caveat. So a lot of these lump sum policies, you have to be careful about what they cover, how many items they cover, and what are the initial diagnosis benefits versus a reoccurrence benefit versus an additional diagnosis benefit. I feel like we've got one of the better plans out there with a guaranteed issue with no health underwriting questions for up to $30,000. Additionally, we have an additional diagnosis benefit that pays 100%, which a lot of them, quite frankly, they're not that great. So I'll give you an example. One of the most popular carriers out there, their additional diagnosis benefit, you could have a $30,000 benefit, but it doesn't matter. Your additional diagnosis benefit is a whopping $5,000. So they really cut those things down, because statistically, they know that if you've had one critical illness, there's a pretty good chance that another one could come down the road. So this is where the market is. This is the evolution of the market. We're going to talk, the next episode, we're going to talk about some of the differences between life insurance with living benefits versus a traditional long-term care insurance plan, and how the market has shifted there. Anyway, I've gone long enough. We are almost 7 minutes deep. Thank you very much. I hope you're having a great day. Hey, be sure, give it a thumbs up, subscribe, like this thing, and comment in the comments below. That helps the algorithm and helps this thing get out. Let's just get some great information out there to people. Thank you so much. Take care. We'll see you.